Alright, what's up? We're going to do another video, two in one day. I know we're getting after it. But this is the amplified lecture on my model. I'm going to go over the rules and what I'm looking for as far as in the chart. So I'm on a 15-minute time frame just to kind of demonstrate what we're doing. Um, First off, the first rule for me, this is Asia. And New York session too, but where I trade Asia most is we have to sell on a premium and buy on a discount, and I'll show you an example of that. We have to wait on a fair value gap to be inverted, and then wait for price to come back in that area before we expand, and then I usually go to break even at when we get to 1 to 1. And then take profits at 1 to 2, or you can do that however you want. But basically, the way I look at market structure is very simple. I've studied ICT to death, and that's what I've got a lot of information. And sometimes the more information you have is not good. But you do have to know the basics, and the basics are the way I view market structure and price is going from internal to external. And what I mean by that is internal being fair value gap and external being swing highs or swing lows. So what that's going to look like in the chart is this big fair value gap right here. Okay, what did it do? It took out this swing low. Okay, so we're going to go back to internal, which is back into the fair value gap. Now it could have went way up here, but it didn't. So it comes up here, so the next point I think it's going to go to is at least this swing low. Okay, we break that swing low, make a fair value gap, come into it, we take out that swing low. So it's just internal to external, back to internal, back to external, and vice versa. And what that looks like on a lower time frame, I'll go back here a little bit. I'm sorry I'm not good at this editing stuff. I've got a new camera. My woman bought me a freaking GoPro, and I've got to figure that out. I don't know if I need a new mic because I've got a cheap camera and it's got the mic in it, but we're going to be upgrading, and so just bear with me. I'll get better the more time I have for thumbnails and things of that nature, but I appreciate you rocking with me anyway because I'm always going to be transparent and to the point and all that good stuff. But I want to scroll back to Tuesday's Asia session. It's the session, and show you kind of what I'm talking about, internal to external. It's every time frame, so you know how price is fractal, meaning what happens on a 1 minute is going to happen on a higher time frame. But basically, this is an example of my model. Even though I don't start trading until 7. After 7, it happened right here. Okay, we made this fair value gap, right? And we took liquidity. If you look back, you can see we're at a pretty high point. We invert it here, okay? So I'm waiting on it to dig back up into this, and that is my bread and butter setup right there. We invert it, go lower, but you can see, okay, we took out a swing high here. Okay, so we're going back to internal. Then back to external. We take out this swing low. That's what I'm looking for. So after we invert this and come back up, you have to watch as you're coming down. After you take out a swing point, you really got to watch because price can get it could have respected this fair value gap. Okay, it could have and went higher, but what I watch is for we make a fair value gap that's internal. So I'm expecting that if we're going to be bearish, we're going to take out at minimum a swing low. If we invert it and then come back down and come into it, I'm expecting this swing high to be taken out. After that, you don't know. I mean, it could reverse, so that's why I go to break even on these inversions, because we're always going to go to internal to external. Like here, okay? We invert this, but we take the swing point out. If we do that, I'm not interested in coming back down in here to go higher. because we've already took out this swing point. So I'm still watching. I'm still watching. When this right here gets inverted and we make one, and see these gaps like this, I don't like this sort of, I don't mess with this, okay? I like this right here, 7 o'clock, 6:59, 7, okay? Boom, this is where I lost my count, but this is where I should have, you know, got in. We invert it here. You can get in right there if you want. That's not my model, but after you take out a swing point, you have to watch it. But we never come back down and tested it after we inverted it. My model is this right here. Okay, we have a fair value gap that's inverted. We come back, we make a bearish one inside of one, you know. We come back up into it, and boom, we take off. And we're expecting price to take out a swing point, which would be this, but it never did. But that's why we're only going for 10-20 handles. We're at 63, and we come all the way down to you know, 44. So that's a 20-point run. For me, that would be, I'd be done. I'm only looking for, you know, 10 to 20 handles max in Asia. That's just my model. I'm a scalper. I've been doing good with it. I have to grow as a trader when I trade, like New York, being able to hold a trade longer, maybe take a partial, go to break even, and then just maybe turn it off. Because if I'm watching it, I do have a hard time, because I'm watching these PD arrays, and when they fail, I'm like, uh-oh, here we go. So I like taking my 10-20 handles. So what that's going to look like is you have to identify the dealing range. I probably should have did this first. So this is the 7 o'clock candle, right? This is where I'm going to start trading. So I'm looking at this swing point down to this swing point to get my premium and discount. Premium is going to be above, discount is going to be below. Okay, we're in a premium. We disrespected this. We're coming back up into it. Okay, that would be where I went short. Where would my stop be? My stop would be probably above this, at least this candle, right, this second candle right here, which that would actually be the first candles here if you want to do 1, 2, 3, however you want to do it. But you could put it above here. That's 72. You would have been in at 62. That's a 10-point stop. You know, 10, risk 10 to get 20. That would have worked here, 1 to 2. I like to be, you know, about right here, so that would have been 69. You know, I would have probably had a 6-7 point stop, aiming for, you know, 15 points, 1 to 2, boom, we would have hit it. But identifying the dealing range is what you want to do on whatever time frame that you're trading on. You want the most recent swing point, so that's, we've got the most recent swing high, we've got the most recent swing low. It's not always going to be right, but it is a lot of the time. And if you stick to this model, after 7 o'clock, draw this out, wait for an inversion. Okay, we inverted with a fair value gap. We come back up into it. Boom, you got to be in right here at 62.5. Stop 69. You know, that's a 6-7 point stop. 1 to 1, you could go break even. 1 to 2, you could, you know, whatever you want to do. This might have stopped you out at the break even point if you was in there, maybe not. But I would have been out, you know, down here. But the deal, you have to identify the dealing range. Okay, number 1, set up your premium and discount. All right, we have to wait for an inversion after 7 p.m. That's my model. You don't have to do that. You can do whatever you want. It worked right here. You could have done it right at 627 and got a bigger buy. Just back test it, see what you think. But this has really been working for me when I stick to this. So it's a dealing range, premium and discount. Selling a premium, buying a discount. Wait for an inversion, then wait for it to come back in, and you know, you're good to go. Internal to external. always. That's how the market runs on a high time frame, a lower time frame. We can go to a 4-hour chart and it does the same thing. Um, okay, we take out this swing high here. Okay, it's not done. I don't see it coming back. On a lower time frame, we probably do go into it, but okay, right here, we make a swing point. Then we come back into it here, internal to external. It's easier to see on a lower time frame, but on a higher time frame, I mean, it's doing the same thing. We take out the swing point here, come back up into it, boom. I mean, just go through your charts and look on every time frame and watch how when it takes out a swing high or a swing low, it comes back into internal, meaning it's coming back to a fair value gap or order block somewhere in that dealing range um, to accumulate, to distribute, whatever it's doing. So I hope this helped supplement my model. I know it's very easy. What I'm looking for, well, I got these lines on the chart. Let's see if I can set chart view. I look at the 1, 2, 3, the last week, 1, 2, 3, and this is, I need a line here, so that would be last week, 2, 3. The last 21 days, I look at the previous week's low, the previous week's high, the last 3 days, highs and lows if they haven't been taken out, that sort of thing. I can go over a video like that for bias if you'd like. Just let me know what you want to see. This just supplements my model. It's very easy. It's to the point, but you have to be able to stick to it. You can't, you can't be just trying to trade everything. So that's what I've learned over my year and a few months of trading is you can strategy hop, you can try all these different things, but you have to master something. Like Casper said, he said something in regards to some kind of quote about you can have a million kicks, but if you can do one kick a million times to master it, something to that effect. So that's what I'm doing. I'm just going to master that model. I'm going to start live streaming, and I hope this helped you. If you have any questions, just let me know. Here's the indicators I use are for sessions. I've got the settings changed on them, and the Lux Algo fair value gap. The settings I've got for it are I'll leave the mitigation levels off because they can be reclaimed. Fair value gaps can always be reclaimed and used at a later time, and I like it because it identifies it in the chart for me. The fair value gaps. Sometimes it's not always right. You have to look on your own, use your own judgment. But I appreciate y'all. God bless you. Good luck trading, and I'll see you soon.